All right, we're looking for some earnings in Meta, but it hasn't come out yet. So let's talk IBM. Nothing wrong with that. George Tsilis with us, taking a look at the comeback story in this stock, which actually has had now a couple stable, steady grind years, and just put in very close to a multi-year record at $150 last month. George, the earnings. They seem fine, GT. I mean, they're up a little bit. Watson AI going to take a little part in that whole theme?
Yeah, I think so. I think if you break down their divisions, they actually showed some promising growth in their infrastructure business. I'll talk about that in just a sec, but the earnings actually came in on both top and bottom line ahead of expectations. It looks like $2.20 was the print for earnings on an adjusted basis versus $2.13 estimate, and that's higher by about 18% or so than the $1.81 last year. And sales came in just fractionally higher at $14.8 billion versus $14.73 billion. And that's about a 4.5% clip compared to last year. So pretty good quarter for the name. I think if you look at their software business, that was slightly higher. It came in at $6.27 billion versus $6.25 billion. Now their consulting business missed just fractionally, but I think the important one here for IBM, at least for the growth story in terms of artificial intelligence, is its infrastructure business, and they actually came in at $3.27 billion versus $3.13 billion, and that includes their divisions, which include cognitive solutions, system security, as well as their artificial intelligence. So that's a mainstay, important business, and I can see why their consulting business was a little bit soft, considering, we've talked about IT consulting services have actually been a drag on a lot of these companies year over year.
George, how big is that for them right now? I mean, can they be mentioned in the same conversation as the others on that subject of AI?
Well, I think they should be. I don't necessarily know how accretive it's going to be for growth. And if you just consider, just look at the performance after hours, you don't really see much activity. If you look at the earnings per share for the business at around $9.52 estimates, they're paying quite a bit in dividends, $6.64. So that's about 72% of total income in dividends. And this is not a growth story. Really right now, based on the current guidance the company's provided for the next 4 quarters, which may change considering this earnings release today, their sales growth for the next year or 4 quarters is only 3%, but their EBITDA is only expected at 1%. So this is a story of a company that is very cash rich. It's more of a sort of wait and see yield-based business where you could harvest some yield in terms of dividends, because the yield on this on a dividend basis is about 5%. They have plenty of cash. Their operating cash just last quarter was $12 billion. Yeah.
That's pretty good. That's a pretty good little cash pop there. I mean, the free cash flow is moving in the right direction, keeping up with not booming, but solid, top line growth there. Hey, we got Meta though, George, so we got to divert for a sec. Hopefully you can zig with me for a moment as we look at these numbers, because it just came out. Shares are jumping up to $312. I know you weren't prepped for Meta, George, but I'm going to keep you with us for a moment here, as obviously you've talked with us about the stock many, many times. You know it very well. All right, the numbers. 439 for earnings. I'm not sure about that though here. Let's go to the revenue first. $36.5 to $40 billion is their guidance range for the next quarter, which is well above where analysts had expected, around $36.6 billion. So I think that's kind of where your initial tick is explained by there. The outlook improving for next quarter. Also, they did 23% growth to $34.2 billion in the quarter, so up from $27.7 a year ago. That's a chunky return to growth. It's pretty impressive, and their costs and expenses came down. So it looks like they are still making it an efficient business from a pure financial perspective, and still billions for all of your active user categories. Daily active users, 2.09. Family monthly active people, 4 billion, and then the daily active people, 3.1. Those all look like pretty clean numbers to me, George. Give me a quick thought.
Well, I think the clean numbers, if they come in with them across the board, both on earnings, sales, and even as you mentioned, the monthly active users came in line at 3.05 billion. I think it might be geared to continue the upside. The reason I say this is just look at Google. Today it was a disaster. and it's really based on their cloud business because public cloud is where the growth is, and they're losing growth share, if you will, compared to Microsoft. So, but their ad business was phenomenal, both in their traditional search, but also YouTube. So I think you got to think about the traditional ad revenue for Meta platforms. That's their core business. It fell in sympathy with Google. But the growth prospects for the company, at least on an earnings profile standpoint, last I looked, were about 8.5% on a forward basis, where last year, last 4 quarters, it was negative 6%. So they're moving in the right direction. The stock hasn't hit, all-time highs. It's been a nice move this year, but it has fallen because it was trading at around $325 just a few weeks back.
Yeah. All right. Well, right now, after closing under 300, it might reclaim that threshold at about 311. Thanks for the thought, George, and appreciate the deep dive into IBM. Meta shares are getting some relief as the company continues to trim costs and surprise on the top line with growth.